hand over now to Leslie to lead us in this conversation. Leslie, over to you.
Thank you very much, moderator, and good afternoon, ladies and gentlemen. Like all the other sessions before this one, I believe that innovative finance is the most important subject for us over this conference, this summit. I say that because there is a search underway. We are going back to the laboratories, if you like, to find new ways, to find ways in which we can reinvigorate, retool the development finance system to deal with the modern challenges that we face today. I mean, as a starting point, as you know, dating back way back to 1944, when the development finance system was really established with the World Bank, since then, with only $20 billion of paid-in capital, more than $1 trillion have been raised through the power of leverage through the capital markets. 20 years ago or so in Monterrey in Mexico, the concept of innovative finance was really sort of born. It was captured in the final communique of the Finance for Development Summit, and since then there's been considerable innovation. We've had blended finance structures, we've had green and sustainability bonds, we've had IFM, for example, create a set of instruments where we were able to raise through advanced market commitments specific bonds, which is really what led to Gavi becoming one of the most successful public-private partnerships over the last 2 decades. However, there's still a significant financing gap. So we're here to talk about that subject, and I'm joined by 2 very esteemed panelists who have very deep experience, each more than 20 years of experience in investment banking, private equity, and development finance. So we want to drill more into that concept today. I'll start with you, Rachel. Rachel is the CEO of ARM Harris Infrastructure Investments, and I want to ask you, what do you see as the remaining to investment in the energy sector? And afterwards, I'll come to what solutions do you think we can propose?
Okay. Thank you. Good afternoon, everyone. It's a pleasure to be here. Before I delve into what the issues are, just want to specify exactly what we do at ARM Harris. So we are a private equity firm focused on investing in essential infrastructure assets across West Africa. So from access to energy to efficient transport and connectivity, we focus on projects that have the potential to deliver strong returns to investors, as well as a major impact on the communities. So what we've faced over the years, of course, doing infrastructure, is that we're dealing with a very volatile environment, from regulations to our currencies, to the landscape and access to finance. The key issues, especially when dealing with long-dated assets, is that uncertainty is what has prevented really the investing at scale. So even when you are a sophisticated investor, what you are faced with is, from the investor community, in providing or looking at those investments, what they're shying away from is the key point really is the volatility. We've gone through devaluations, we've gone through changing regimes, so we've sophisticated our approach in structuring around that. But even at that, what you can do is to limit the losses, but you cannot eliminate them. And so we also coming in very early. Being equity, we're coming at a point at the project cycle when things are still being put in place. There's very few capital that have the patience and the risk appetite to do that. And that has also been another pain point that we haven't yet solved. Lastly, talking about the illiquid nature of that. A lot of investors, and people would mention pension funds in particular when you look at developed market, because the long-term nature of those assets should be a great match for the pension funds. However, for the risk that I've mentioned, and for the illiquid nature of the asset we invest in, because it would take you 2 to 3 years to develop a project, another 2 to 3 years to build that project before the assets start generating cash flows. So it's a long time for pension funds not to receive any distribution, and that also has been one of the challenges that we face. Lastly, and I'll stop there, the currency, as I mentioned. One way to mitigate it is, of course, to have the local currency being able to match that of the revenues of the project. But what we face is that the market, the banking market, or at least the investor market, the financing market, generally speaking, is not deep enough to provide the long tenured that are required and the quantum that is required for those very capital-intensive projects.
Thank you very much, Rachel. I'd like now to move over to Jules Ngangam, who is the CEO of the Africa Guarantee Fund. How is the fund responding to these challenges with respect to the solutions that you believe you are offering the market?
Okay, thank you, Leslie. Good afternoon, everyone. Yeah, so we started a point on the barriers because at AGF, the product that we are offering were designed to address those barriers. And when we talk about barriers for investment in the GRE, on the renewable, it's as opposed to traditional investment, because all sorts of investment, they have their own barriers. But when it comes specifically to the renewable sector, I would say the main challenge is liquidity, is this arbitrage between CapEx and OpEx. You know, investors, they will tend to go for projects that have a lower CapEx but higher OpEx. Because what we are telling them is that upfront they need to invest a huge amount of money, but they will get the payback over a long period of time. The next challenge is mainly on the duration. You know, the duration is the fact that the payback period is quite long, and we have a mismatch between the type of resources that the investors have, the tenor, compared to the tenor of the project. We have the collateral, which is a major one. You know, when it comes to the renewable, the investors tend to apply a high haircut to the collateral value of the equipment. You know, the way they assess the equipment, the collateral value is it kind of easy to resell those equipment in the secondary market, and it's very challenging to resell those type of equipment. And when it comes also to the issue around the maintenance, and because of that, the depreciation ratio for equipment in the renewable sector tends to be very high, so they depreciate those equipment kind of very fast. Rachel mentioned the currency challenge, the information, lack of information. So our product have been designed to address liquidity, the duration challenge, the lack of information, and our product goes mainly around guarantees. So we have loan guarantees in a portfolio basis, individual basis, depending on the size of the transaction, because we want to cover the entire value chain when it comes to the energy space, you know, from the very small SMEs to the medium one. And the loan guarantee helps to address the issue of collateral. We do provide also the bank fundraising guarantee to help those investors to provide long-term finance to the SMEs to reduce the mismatch in terms of duration. We have the equity guarantee, which is a very critical one because we have realized that they kind of rely heavily on debt finance, so we do also attract investment on the equity space, you know, to be able to help them to have long-term financing.
Thank you very much, Jules. Now, let me come back to Rachel. You know, over the years, British international investment have found that the availability of local currency is a central ingredient of being successful in a number of markets on the African continent. You run a multi-currency fund. How important is the local currency offering in your view?
Thanks. It is critical. And for the second fund that we're raising is the key element, really, that we're focusing on. Why? Because for the first fund, we did take investors in local currency, but then converted it in hard currency, because there were so many issues at the time that we couldn't fix. And today we are proud to say that we are able to invest local currency into local projects alongside international capital, because sometimes the two don't necessarily match, and the risk profile of the investors are also different. So that's truly the blended nature of what we've been able to do.
So you're able to bring in sort of local pension funds, local institutions into those investments?
Absolutely. Seeing eye to eye as to how the capital, because really what we do is really take the right kind of capital for the right type of projects and in the right capital structure. And that's the most efficient way to really leverage both local and international. So we've learned, and we've learned from discussing with the pension funds, and I did mention the illiquid nature, right? Even when you look at developed market, it took the pension funds a long time to get to where they are today. Today we see them owning assets, but they were first very hesitant about that until they were able to master it. And there's a lot that needs to happen at the regulatory level. And because we are not there yet, all markets within where we operate are not there yet. So what we do is that we're very selective in the type of project that we do, where we know we can minimize the impact of regulation, if not eliminate it fully by engaging bilaterally. So we've learned lessons the hard way, but what we are able to do is to really bring both the local currency, the hard currency, so how we source equipment, where we locate the project, how do we use the civil work, and why do we need to go and put dollars against it when we can do it locally? So it also encouraging to start building industries locally. So it's critical, and I think it's really a game changer, and we would not be able to do that if we didn't have concessional capital or junior equity, essentially. So what the DFIs are doing is supporting fund managers like us to really de-risk those projects, because as sophisticated as we are as fund managers and having done a lot of projects on the continent, we do not control the monetary policies. We do not control the regulation. We can, of course, influence that by bringing the private sector perspective in those discussions. And we don't also control the fact that by nature, those projects take a long time to get on stream. But to enable and attract pension funds, in spite of that, we need to have a capital that is patient and that could take the first loss.
Thank you.
Right? So this is quite critical.
Thank you very much. Jules, I wonder if I could ask you whether you think that the moment has now arrived where guarantees have really kind of, if you like, getting the moment in the sun. I mean, as you know, Ajay Banga, one of his first initiatives was to establish a private sector lab, and one of their first recommendations was bringing together the guarantee product of the World Bank, the IFC, IDA, and it looks like there's now a clear recognition that guarantees have a significant role to play to mobilize private sector capital. Are you very confident that that moment has arrived now for guarantees to be much more central to the finance offering for development finance?
Yes, absolutely. I think the time has come to leverage more on this type of product, and I would mainly give the case of AGF, why we believe that today we are well positioned, we are best positioned to tackle the challenge when it comes to the renewable space. So I'll give you maybe 5 main reasons. The first one is on the product. We launched the Green Guarantee Facility a decade ago, and we are in a position where we have a track record on what works best. So we believe that at the product level today, we have a product that was designed to tackle the challenge facing that sector. The second reason is our coverage, our continental coverage. We've signed guarantees in 44 countries in Africa, and then we believe that by partnering with the GFI, those SMEs, they prefer to borrow in hard currency. Is the cost. It's cheaper to borrow in hard currency where they don't see the currency risk. If we can lower also the interest rate for the investment in local currency, will play a huge role. And we believe that by leveraging on our rating, the financial institution can achieve that. Yes, and the last one is the leverage. The fact that with $1 of resources, we can channel $10 of private capital to the players in the GI space. Thank you.
Thank you very much. Rachel, if I could return to you, I mean, we have private sector players, institutions here in the room. What would you say are the sort of core propositions why investors should, for example, who are interested in the ARM Harith Infrastructure Fund, why should they invest? What's the core proposition that you are putting forward?
Thank you for that. So I think it's really the fact that we have boots on the ground and solving for the issues hands-on. So for every single evolution, I guess, in our industry, you need to have new products. And I'll give an example. I was mentioning that investors, particularly the local investors, and the reason why I'm insisting on the pension funds is that right now, it is probably what could bridge the gap for setting this infrastructure play that we're all talking about, because there's a lot of capital that is there that could be unlocking what we're trying to do. And so, to give an example on the illiquid nature of the assets, we realized that it was a key pain point for them, more so than the returns. So we collaborated with the DFI in order to have a pocket of capital that would not necessarily be first loss, but that would provide early yield to those pension funds. It's never been done, right? So but we needed to do that to unlock that particular capital. And they welcomed that with open arms, and now we are having more local investors coming in, because now they don't have the pain point of waiting 5 to 6 years before getting the first distribution, right? So those kind of example is truly being agile, really having boots on the ground and understanding what are the issues, and having the network to bring stakeholders together to co-create solutions so we can keep moving forward while we fix the bigger issues at the macro level.
Jules, if I could ask you the same question. If you were sitting in front of potential investors, donors, institutions, what is the core proposition why they should put money into the Africa Guarantee Fund?
Yes, so the core proposition is our ability to mobilize private capital. Because we believe that GFI alone, donor, they will never have enough resources to address the challenges that we face in the energy space. So we need to mobilize or channel the private capital that sits in Africa in the banking sector. And this is our core value proposition as AGF, because with our guarantee product, with our technical assistance, we have the tools, we have the capacity, the rating, the leverage to channel enough capital from the private sector where it's needed.
Thank you very much. We've unfortunately run out of time. I'll just make a couple of very brief remarks in summary. I mean, as you have heard, there's considerable momentum today in terms of finding new solutions for our institutions to become laboratories, if you like, to search for new ideas of how to finance development. We know that traditional sources of finance are too limited. Overseas development aid is too limited and constrained. So we have to go back to the drawing boards. And the only way to go back to the drawing boards is to find instruments and ways to leverage and to mobilize the institutional investor capital that sits in sovereign wealth funds, that sits in pension funds, that sits in insurance companies. But the traditional sort of methods of doing that have not succeeded, especially on the African continent, where the markets are still perceived to be too risky. And I'd like to just end off by saying 2 sentences about British international investment. We have been on the continent for many, many decades, and specifically have a unique positioning in terms of deploying equity, the riskiest part of the capital structure, making equity investments in many African countries, because we take this very long-term view and want to contribute to long-term deepening of financial markets, deepening and strengthening of the capital markets, because that's the only way really to have sustainable long-term development. Ladies and gentlemen, thank you very much, and I'll give it back to the moderator.
Thank you very much. Un grand merci à notre modérateur.
Huge thanks to the moderator and the panelists, a very dynamic panel for all the aspects shared with such great precision. We will be continuing our series of discussions on this platform, and we were going to tackle a very significant issue, the future of the sector. We are going to be looking at the necessary transformations to build a prosperous energy future for the continent. So, ladies and gentlemen, and to moderate this session.
Thank you very much. Et donc, ce que je disais, c'est que pour moi.
So, what I was saying was that to moderate the next discussions, I have the pleasure to invite on stage Kapi Osbik, the Commercial Director of Africa Green Co., It's a pioneer organization providing solutions in Africa, and they'll be accompanied by eminent people, Alain Obisse, Africa 50, an investment fund which is catalyzing growth. Then you have Tadesse, is a head of TDI. So, ladies and gentlemen, thank you and welcome the next panelist on stage, Alain Obisse, Tadesse, and Taxi.
Alors, c'est étrange, mais j'ai l'impression...
It's strange. I have the impression that the members of the panel are not yet ready, so we will wait for them for some minutes. I have seen someone going to look for them, so I will ask you to be patient for some time. Why not discuss with your neighbor what has been said in the previous session? So we will give them some time.
Alors, les membres du panel...
So the members of the panel are making their way. We have received the confirmation. We will just give them some time. I can see the first one. I think that we have the panel as well as the moderator are here. So we have already welcomed you on stage. So I will do it once more. Ladies and gentlemen, Alain Obisse, CEO Africa 50, Admasou Tadesse, President and CEO of TDB, and Ms. Kathy Oxby, Chief Commercial Officer of Africa Green Corps. So I will ask you to give them a warm welcome. We have been waiting for them. They are here. Thank you. Please take the floor.
Thank you for staying on for this panel. Firstly, thank you to our generous host, the Republic of Tanzania, as well as, of course, to the AfDB, the World Bank, and the Rockefeller Foundation. I am honored to be joined on the panel today by Mr. Alain Abobise, the CEO of Africa 50, and Mr. Admasu Tadesse, the CEO of the Trade and Development Bank. Both of the institutions, as I'm sure you are fully aware, are very active in the African energy sector with a footprint across the continent. So thank you for joining us today to share your insights on the topic of the future of the African energy business. So I'm Kathy Oxby, the Chief Commercial Officer of Africa Green Co., which may be less familiar to some of you. We are a renewable energy trader within the Southern African Power Pool, headquartered in Zambia, and using the regional integration that we've been focusing on today as a diversifier and mitigant of risk to help attract finance into new generation capacity. So as we've heard already a lot today, around the activities going on in the sector and looking at particularly at the 5 priority pillars of Mission 300, we see strides being made under all of those pillars to some extent. Looking at the Southern African Power Pool has been operating already for 15 years or so. The East African Power Pool and the West African Power Pools are finalizing their market rules with a view to launching their own regional competitive markets shortly. On the transmission front, we have initiatives such as the Regional Transmission Infrastructure Financing Facility being promoted by SAP to improve the regional interconnection. And in parallel, a lot of regulatory change underway to facilitate more private sector investment. Now, gentlemen, we've been given a very broad topic to discuss. The sector is rife with opportunity, and there's plenty of space for innovation, and a lot already being done. We need to be bold, and we need to move fast. We need to avoid reinventing the wheel, and we need to identify the most promising initiatives to scale. What do you see as the key trends that will drive the future of the African energy business? And how are your institutions lined up to take advantage of these opportunities?
Oh, well, do I start?
Please.
Okay, thank you. Thank you, Kelly, and thank you to the World Bank and the African Development Bank, and of course Tanzania for hosting this important event. In terms of key trends, I think I will start by saying that we will continue to see a huge growth in the demand for electricity on the continent as the population grows and also as we get a bigger middle class, and also because of our industrialization needs on the continent, and not to mention the AI, ICT, huge amount of demand for electricity. So we should expect a significant increase in demand. So we need to fund a number of projects across the value chain, generation, transmission, and distribution. I also see that there will be a higher penetration for renewables in the energy mix. Of course, in Africa, we want a balanced energy mix which has renewable but also gas to provide balancing power. So we see that also, and that actually has a real impact in terms of how do we organize our grid and etc. I see also a lot more investment going into distributed renewable energy because, of course, we need to make sure that this is one of the goals of this event, to have a lot more access to power across the continent. And finally, I would say that I see a lot more investment coming through in terms of transmission, power transmission across the continent, and especially from the private sector side. Us at Africa 50, we started to talk about transmission PPP in Africa for some time now, 4 years. I'm glad to see that my partner, the CEO of KETRACO, John Mativo, is here, because in Kenya, we hope to do the first transmission PPP in the trunk line, the first independent power transmission, and Masu is part of the team that is also working on doing that. So these are some of the trends that I see, but all of those trends will result of significant investment needs that for sure the public sector cannot cover. So we're likely to see a lot more private investment in the power sector, in the energy sector in Africa. And the question would be, how do you make it happen? How do you create those bankable projects that the private sector is ready to finance? How do you mitigate the risk? And we can talk about some of the solutions that we are implementing at Africa 50.
Thank you. Admasu.
Yeah, thank you, Kathy. Very pleased to be here. Alain kicked off by highlighting some of the demand-side factors, and he made references not just to the normal demand, but ICT. Inside there, you have data centers, all these new developments that are also competing for energy. What has been fascinating to observe is just the way technology has been maturing in the various segments. We've seen it, of course, have huge effects in the renewable sector. Of course, wind has been there for some time, but we see massive adoption of solar, very large-scale, utility-scale adoption of massive projects. And we're also seeing continued advancements in areas like geothermal, even nuclear. And so it's quite impressive to see how the technology side of things is opening up opportunities and making affordable solutions much more attractive to sovereigns. So the technology side is there. Of course, these days there's a lot of new thinking around AI-enabled solutions around the efficiency problem, because we've known inefficiencies have been a big challenge in the sector. And so that is also coming into play. And then, of course, the 24/7 type renewable energies that we're seeing, the green the green hydrogen is also opening up a lot of prospects. We're seeing a number of countries move very aggressively into that. There's about 4 or 5 countries in the continent that have really identified that as a very attractive growth area for the future. So I think on the supply side, we're going to continue to see dramatic developments. It's already captivated us. We've seen what's happened. Cost is a very real factor, and I think the supply side issue around gas is going to continue to be hotly debated. I think the base load requirements of the continent will continue to point strongly in the direction of gas, natural gas, and so there we have quite a few discoveries and resources coming online. We are in one of those countries that has those endowments. We've seen what Mozambique has gone through, Namibia as a case in point, Nigeria. And this will also dovetail into the other side of energy, which is clean cooking solutions, which was discussed this morning by the 2 MDB presidents. And so even there, we see very exciting developments where new business models linked to technology is really making alternative, clean home cooking very attractive and feasible. We have received very special purpose funding to actually help accelerate the rollout of distributed renewable energy, mini grids, off grids, and of course, new business models in the clean cooking space. And so it's not just the technology side on the supply side, it's also a very deliberate big push on funding. Why we're here, M300. But even before the M300 was announced, we had already been pushing very hard on the DRE side. And we've seen a number of small-scale SME players in the sector take advantage of both the resources, but also the opening up space. I found it quite fascinating that 20 years after the liberalization of the energy sector, this morning we were still talking about trying to get the regulation right, trying to get the policy framework right. And it's fascinating for somebody who's been around this sector for some time, that's something that we were dealing with at the turn of the millennium, right? It's not a new conversation. Reforming infrastructure, reforming energy, unbundling the sector has been, going on for decades. And I really hope that we'll be able to get that institutional innovation to actually come together well. And it's not that we don't know what it takes to get things to happen, but I think this morning President Banga talked about faith and trust. A private sector needs to get to that point of trust, right? It's not just about us saying all the things that should be said. But I think money talks. It's not just the talk. I think we've heard the big numbers being announced today, the huge amounts of development finance together with concessionary financial resources that are being made available. So that gives me confidence that the needle will begin to move.
Thank you. As they say, money's like water, right? It flows where it's easiest. And so if we want it to flow in the directions necessary to achieve the goals of Mission 300, we need to facilitate the path for it. I think you raised some very interesting points there around the demand side and the interplay with regulatory reforms. Because I think there has been a recognition for longer of the role of the private sector on the generation side. But we're starting to see more recognition that the major consumers, in many cases, are private sector, with the willingness and the appetite to pay for the fuel. And it may not be, therefore, necessary for the utility to sit in the middle. So we're seeing more countries opening up the sector to allow that private to private. Do you see that as a trend in the countries that you're operating in?
Yeah, I think we see different models that countries are implementing. I think we also see a lot more pragmatism from countries to try to find out what works. So whether you have captive power, so selling electricity directly to private customers is allowed in many countries. But I think what we want to see a lot more really is a huge increase in the pipeline of bankable projects that could attract the pools of capitals that is sitting on the sideline looking for ways in which they could be invested and earn a return. And for us, I think there is a big effort that needs to be made in risk mitigation. Those instruments are available, but they are a bit cumbersome to use. So if we could, facilitate the use of risk mitigation to cover some of the risks that the private sector is not very comfortable to take. But I think for me, it's also a huge amount of effort has to be made in increasing the resources for project development. Project development is essentially the kind of resources that are needed to build up the pipeline of bankable projects, putting money at risk early stage to build the pipeline. And this is what we are doing at Africa 50 with a specialized project development vehicle called Africa 50 Project Development. It's a $100 million facility that is investing in early stage project development. But we are also in the process of raising a $400 million fund called ASIA, the Alliance for Green Infrastructure in Africa, that we are co-developing with the African Development Bank, the African Union Commission, Africa 50, and a number of partners, investing to build up the pipeline. And we have a number of projects. I think I see the Minister of Finance of Madagascar is here. We are helping the country on the 20-megawatt hydro project, Volobe. I see that my sister from Mozambique, Minister of Foreign Affairs, she's here. And we're looking at power transmission, PPP, at the development stage. Of course, I mentioned Kenya. So there is a lot happening, but what we need to do is speed, faster things, faster, getting things to the financial close quickly and commercial operations quickly, and then scale. So it's nice to do things here and there. We know how to do it, that's the good news, but the not so good news is that we have to do it faster and then at scale.
Thank you. I doubt there's any disagreement in the room that we need to do things faster and bigger. I guess the question is how. And I think you raised the issue of bankability. And certainly, through our experiences, I think one of my favorite phrases is bankability is in the eye of the beholder. There is no set-in-stone rule as to what constitutes a bankable deal. And we need to work together to find new and innovative ways to address risks and to accelerate the closing of these transactions. Through the process of establishing GreenCo, we often encountered that as we were trying to encourage people to think differently about the way risks are covered and power is procured. We often heard, the people say, oh yeah, it's a great idea, but it's never going to work. It's too ambitious, it's too big, it's too political. But we carried on, we persevered, and where we are today, I think is a testament to those who believed. And the Rockefeller Foundation, I have to give a shout out for being our earliest supporter, without whom we wouldn't be here. So I think with Mission 300, we have such a huge backing from these fantastic institutions. So for you, are there particular things that you see as being, or seem to be insurmountable obstacles at this point in time, but in 5-7 years' time, we'll just accept that they are perfectly normal and acceptable things? What breakthroughs are needed to help achieve the Mission 300 goals? Would you like to take that one, Admasif?
I don't think I heard very well, so I'm going to start using this. I think it's got such a high ceiling here, I think it's swallowing up the sound. So I don't know if Alain heard, maybe.
I'll take the question. I understood that because I'm closer to you, so I can. Look, you're right. There are a number of things that people are always saying it's impossible, and then you have to just be creative and persevere, and then when you get things done, people will follow. Success breeds success. But what seems like impossible at this point, which really we're trying to tackle, is those project development. Project development is hard, it's risky. People spending money early stage before you have the contract is tough. That's why many of the global investors, global power companies, they're leaving Africa because they don't want to risk as much money on the project development space. But we, at Africa 50 and others, we have to tackle project development. We have to spend money early stage to support companies that have good ideas, that want to test the feasibility. We have to do it. And this is a process that hopefully we can scale up, and we are in the process of scaling up. I also want to say local currency. Local currency is going to be, it is a game changer, okay? Because financing large pieces of infrastructure with foreign currency, it's possible, but the FX risk is too high. So we need to figure out a way to tackle local currency. I think this is something that institutions such as Africa 50 we are doing. We are doing by mobilizing African pension funds. We launched the Africa 50 Infrastructure Acceleration Fund. We brought together 16 African institutional investors to back our first close at $222.8 million, $0.5 million. It's small, but it's a way to start mobilizing African institutional investors alongside global investors. It's important. So these are the kind of things that seem insurmountable, but once we do it, maybe hopefully more people will come to the party.
Thank you. Excellent point on FX there.
Yeah, Kathy, just to top up on what Alain said, I think we do have some very promising wins in our sales, not just dedicated resources that are being made available, but institutional innovations that even Africa 50 itself represents. If you go back to the turn of the millennium, when we were debating these issues in the context of liberalization and PPPs, there was no Africa 50. Today, you have a dedicated institution like them that can actually get involved early stage and take those risks on a patient basis, like he said. And some of us, of course, have also realized that debt funding is important, but it's not enough. And so we have also begun taking quasi-equity positions in projects when there have been sensitivities around gearing and there being inadequate risk capital. So we've done a combination of senior debt and quasi-equity. We've also decided that we need to also expand our toolkit, in some ways learning from what Africa 50 and others have done, by having more technical assistance and grant funding to support project developers in the early stage on a patient basis. It's not like it's free money. It'll be returnable grants if the project succeeds and it becomes reimbursable, and we rechannel it to other deserving projects. And so we have a dedicated vehicle now separate from TDB itself. It's called TDF, and we've managed to attract philanthropic partners in addition to the usual suspects who give concessional and grant funding, that is official development assistance related funding. So there's quite a bit of innovation happening even within the MDB world. I think even the way this M300 initiative has been launched. I think the term was used this morning, many different hands together dealing with this complex challenge. And there's a lot of us who are actually very much engaged in this. I'm working very closely with the World Bank Group in addition to the African Development Bank and the Africa 50. And I'm not just saying this in terms of just general working together. We're talking about facilities and syndications and clubbing together, but also receiving very significant large-scale funding. I mean, 10 years ago, I couldn't tell you that I was a significant partner of the World Bank Group. Today, the World Bank Group has become a major partner of TDB, and we're working closely to help expand the rollout of new business models. As I mentioned earlier on, DRE, distributed renewable energy, but also mini-grids, off-grids. And we have clients here in Tanzania who've made good use of some of those facilities. This is long-term funding. We can go 15 years. This is for private sector SME lending, right? So if you go back 5 years ago, none of these facilities existed. So, I mean, there's real practical examples that we can point to that shows that, you know, these big policy pushes are getting dedicated funding. Of course, you know, in the final analysis, you need that risk appetite, right? And I think the countries do need to continue investing in creating an attractive and enabling environment. I think that was spoken about again this morning. Predictability is so important. Even though it's obvious, in reality, it's not simple, right? It's an obvious matter, but we've seen setbacks in a number of cases, and we see you know, dramatic shocks happening in some countries. And so I think we just need to keep beating those particular drums, because, you know, that's exactly the kind of thing that scares developers away, right? I've been involved in some countries where there were missing links, and you have a pay or take kind of arrangement. And so the power project that was generating the power did their part. And they're like, you were supposed to roll out the transmission line. You didn't. So it's a deemed take. And so the client had to, you know, the sovereign actually had to pay for the power, even though the power wasn't taken. But that's an example of a sovereign that took up its responsibility the right way and realized that they were going to break the project if they didn't actually pay for the power that was not taken because there was no transmission line. And so, I mean, there's a lot of dependencies as well, and I think this is something that experience points out as being something that requires good policy, good planning, good programming to ensure that big investments don't end up, you know, being exposed to missing links that become very, very costly.
Yes, thank you. And I think you were talking there with you about the environment that is needed for this bankability. And I think the private sector is generally good at taking risk if it's able to assess that risk. So you're talking to transparency and predictability and certainty. And those core fundamentals are really the foundations to enable the private sector to play the full role it can play. So we've talked about the unsurmountable but actually surmountable obstacles. There's no such thing as impossible. But we also can't foresee everything that may be around the corner. Are there things, tailwinds or headwinds, that sitting here today, if you had to predict something that we would say in a few years' time, oh, I didn't see that coming?
First of all, I am predicting things that we're working hard to make happen because that's what's going to change the game. I think what we're trying to do to change the game is two things. I think the most important really is to promote very hard and to support a lot more participation of African stakeholders, be it African developers, African investors, African companies, into the African power sector, because we work, of course, we're very happy to work with global institutions, global sponsors, but this continent will be developed The investment will be driven by African stakeholders, and we need to see a lot more of that. And we are working on that. The Alliance for Green Infrastructure in Africa, we have a special bucket too, which is there to support African developers. We also have a bucket that is supporting others. So we need to see that. And again, we're working hard to try to make sure that what really will change the game is to make sure that you have bankable utilities, off-takers that are able really to provide an off-take without government guarantees. If you have that, huge amount of money will come in. We've seen it in other regions. We will see it in Africa. So for me, we'll see it, and I'm working hard to make it happen.
Thank you.
Well, one or two things come to mind. I spoke about the supply side, technology-driven dynamics, and some of those move much more quickly than you would have expected. I think on the policy side, there are some developments that appear to be in the making that might, liberalize some aspects of the financing for natural gas projects, because it's not been very easy for African countries to be able to raise financing to develop gas. I think Mozambique was lucky, and they're on a roll. Certainly Tanzania is finally catching up. Namibia, for geopolitical reasons, has managed to attract good attention, the same with Senegal and Mauritania. But I think there may be some dynamics in that space where all of a sudden a window opens for a little bit more access to long-term funding and private sector investment in areas like that. The one thing that I've also been observing with curiosity is the number of countries that are embarking on nuclear power development in the continent. There's quite a few countries that have actually signed up for that, and you hear bits and pieces around that. So I think the diversification of the mix will continue. I don't think it's going to always be in the same way we all expected, but I think in the final analysis, it will be a net positive. And I think, eventually the technologies will become so much more interesting on the renewable side that whether you have strong policy incentives or not, we'll still have a massive expansion of renewable energy. And I'm hoping that that will be the case. On the hydrology side of things, we see some big dams being developed in a number of countries. We hope climate change doesn't affect the hydrology too much. But yeah, that's also a very proven segment of reliable long-term baseload power. And we'll see a few more countries doing that. And, but I think that's more of the same kind of development. I think it's the newer stuff that's going to be capturing our attention in a few years to come.
Thank you very much. Yeah, and absolutely. I guess the panacea is the single continental energy market, the dream of the African Union. And we see concrete steps towards that and to maximizing the efficient use of the abundant energy resources that the continent's endowed with, but using those in the most efficient way to achieve the lowest cost energy for all. So with that, I think our time is up. Gentlemen, thank you very much for sharing your insights. It's been a pleasure.
Thank you.
Thank you.
Thank you very much, Kathy. A warm round of applause. Thank you so much to your panelists as well. And so, ladies and gentlemen, from a focus on the future of African energy business, turning inwards now to the question of clean cooking. As I invite my panelists to descend the stage, I know that my next set of speakers is standing by, ready to come and join us onto the stage. Introducing the moderator of the session, and that is Rashid Abdallah, Executive Director at the African Energy Commission, or AFREC.